Hey guys, what's going on? This is Kyle at ProjectionHub, and today I'm going to be talking to you about how to get an SBA loan for a food truck. Now, this should be applicable to if it's a startup food truck, like if this is a brand new venture for you, or maybe you have an existing food truck and you need some working capital, or you're trying to expand, or whatever that might be. And we're going to talk about that in great length today. Before I cover exactly what we're going to talk about today, as I mentioned, my name is Kyle, and before my time with ProjectionHub, I was an SBA loan officer for almost 7 years, and so that role looked a lot like helping applicants complete their application, review their business plan, review their financial projections, collect their documents, take them through the application process, take them through the underwriting process, close their loans. So I'm familiar with being on that side of the table of providing the SBA loans. And in my time with ProjectionHub for almost 3 years now, we've helped more than 50,000 small businesses create financial projections more specifically, but those are a very key part of the loan application process. So, and in my time as a lender, I got the chance to work with several different food trucks and actually even get some of those approved. So know what a good food truck loan looks like. And we're going to talk about that a little bit today. So speaking of what we're going to talk about, we're going to cover things like the different types of SBA loans and what type of people specifically get those types of SBA loans. We're going to talk about eligibility requirements. We're going to talk about what a typical SBA loan process looks like, the documents you need, whether you're a startup or an existing business or acquiring a food truck. What does the documentation list look like for that? We're going to talk about, even recommendations to improve your approval chances for an SBA loan, which I think will be helpful and interesting for you. And then we'll even talk about how to find an SBA lender if you haven't already identified the specific one, where you might be able to find different ones. So we're going to cover a lot of information today. It's going to be a long video. Please feel free to use the timestamps down below the video to hop to different sections you're interested in, especially if you're a startup. You may just want to look at the startup sections or however you want to approach that. So if at any point you appreciate this video, please give it a thumbs up. That really helps us as a fellow small business. Consider subscribing to the channel. We release a lot of content and videos that we hope will be helpful to you. And if you have questions, leave a comment down below. We would be happy to answer that for you, or email us at support@projectionhub.com and we can help that way too. So without further ado, let's go ahead and jump in. All right, so as I mentioned, we have a lot of different things to cover today. And to help us through that, we're gonna use this free SBA loan application checklist. You can get your own copy of this down in the description below. This is something that we put together. And as I mentioned in the introduction, we're gonna cover what types of SBA loans to pick, how to find one, what's the process, documents needed. And I'll point out before we get started, you'll see all these little icons with these links. Those are links to resources to help you. I think the vast majority of them are free resources. And if they're not, I will be sure to tell you while we're going through this. But we've also got links to YouTube videos. You can see some down here. And so there's lots of links in here that would be really helpful for you as you navigate the SBA loan process. So I would encourage you to take advantage of that. So let's first talk about the type of SBA loans. So there are many different types of SBA loans, and maybe I should even preface to say, what is the SBA? SBA stands for Small Business Administration. It's a department or like a bureau of the United States federal government. And so they take some portion of tax dollars that go into the SBA, and those are used to basically provide guarantees to SBA loan intermediaries. So when you're applying for an SBA loan, you're not actually applying directly to the SBA. You are working with these intermediaries. So, like banks can be SBA. If they participate in the SBA loans, they can be an intermediary. We also have these microlenders. We're going to talk about some different ones doing that. And so that federal funding is kind of propping up those loans, and it's encouraging these lenders to make loans that maybe they wouldn't have originally made if they were lending their own money exclusively. So that's a very fast and loose description of what the SBA is. And there's many different types of SBA loan programs, but the three we're going to talk about primarily are the microloans, 7A loans, and a little less so specifically to food trucks is 504, but we'll get into that. These links here all go to the SBA's description of those programs. So my experience when I was a lender, as I mentioned, for almost 7 years, was at a microlender. And those are little bit lesser known than a bank offering a 7A loan, but they're really, really vitally important, especially as a food truck business, and especially if you're a startup. I would really encourage you to check out microlenders. So I'm going to talk about those in some greater length today. So what types of loans are these? as you can see here, microloans are most common with startups and smaller existing businesses, and that's just because the dollar amount is lower. They're typically offered by SBA microlenders and what are called CDFIs. CDFIs stand for Community Development Financial Institution, which is a mouthful. SBA microlenders and CDFIs, an organization can be both. They can also be one or the other. And so they're just essentially offering different types of programs because they have different certifications, but the dollar amounts are just smaller. It's really what they are. And so typically those go up to around $50,000. These lenders can differ greatly from each other in what their specialty is. They might have a focus on a specific cause or a mission. So maybe they are, really focused on supporting women-owned businesses. That's common. Not all of microlenders have a specific mission that they're trying to lend to. The one I went to specifically, it has different programs for like Black-owned businesses and different things like that, but we would make loans to every small business. So that's not an exclusive thing. But yeah, the key thing is they're typically going up to $50,000. And so, in terms of a food truck, that might be all that it takes or less than that you would need. So that's worth looking into. Now, 7A is, and again, you'll notice many of these different programs have overlaps between different lenders. But 7A is primarily what like a bank is going to provide their version of the SBA loan. Those loans can go up to $5 million oftentimes. And so, that process, a 7A process, is going to be a little bit more standardized, and we'll talk about that a little bit. But just in general, banks are more standardized, more regulated. And so you're going to probably know what to expect when you're going through that. That's going to be more common for an existing business. Just banks in general are less likely to lend to startups. And so just naturally they lend more to existing businesses, and the dollar amount's higher, and you name it. So that's why 7A is more common for an existing business, and just the fact that the dollar amount can go higher. If you're considering an acquisition, that's going to be a 7A loan most likely, just because the dollar amount's going to be bigger. And then lastly, honorable mention, 504 loan. These are geared more towards like large, long-term fixed rate financing for like buildings or land or like large pieces of equipment. And so, that could be more common in like manufacturing or, different things like that. So those are unique because it's kind of a three-way partnership between the owner contributing some funding, a bank contributing some funding, and what's called like a CDC lender contributing some funding. And so they're kind of unique how they work in that way. So, but through the lens of a food truck, we're going to be talking a lot more about microloans and 7A loans. So let's go ahead and continue on. And right now we're going to skip finding an SBA lender. We'll leave that towards the end because all of this knowledge, I think, will kind of help lead you up to finding an SBA lender. I don't want to like jump the gun and start there. So we're gonna pause on the find an SBA lender and we will come back to that. And right before we jump into the SBA loan process, I want to quickly talk about eligibility. So because there is this layer of, the federal government that is involved, whether they're providing some funding or some guarantee to the lender. So maybe that's an important clarification to make is, like I already said, you're not going to be interfacing with the SBA directly, and the funding is usually going to be worked out on the back end with the lender itself. But because of the SBA is involved, there's some just additional layers of like rules and some things you have to follow in order to be eligible. Now, for a business like a food truck, so there's two different types of eligibility. One is the use of the loan funds. So there are specific things you can use the loan funds for and certain things you cannot use them. And then there's like personal eligibility. A food truck business, use of loan proceeds is probably not going to be a concern. There's not really anything like nefarious or borderline, that could impede or be an infraction of those eligibility things, most likely. So if there's going to be an eligibility issue, it's primarily going to be on the personal side. And so we can look at those quickly. So you have like types of businesses that are ineligible. So that, for example, are going to be like businesses doing illegal things or selling an unlawful substance, or like a sin business, like a casino or something like that's not going to be eligible for, an SBA loan. So that's more what's going to be going on there. So the other eligibility to kind of be aware of would be like Personal issue might be like types of bankruptcies within certain years. If you have a criminal record there, that doesn't necessarily exclude you. There are types of felonies that will disqualify you, but there's just some additional disclosure stuff that has to go through. If you're in the process of working through, that experience, then you're going to be ineligible until that reaches some resolution. There's just some different things involved in there. So we're not going to go into great detail on that, but that is a thing to keep you aware of, that, if you have any concern about those, I would encourage you to talk to your lender about that up front, so you're not wasting your time. Okay, so let's get into talking about a typical process. So most of the lenders are going to follow a pretty similar process. As I mentioned before, microlenders, their process could differ quite a bit from one another because they have a little bit more freedom to do what they want in that process. There's a little less oversight in the loan proceeds and how they're used and the loans that are being made. Whereas 7A loans are going to be quite a bit more regimented, and especially if it's through a bank. But in general, this process should still hold true. All of the lenders are going to have some sort of intake application. So that's going to be probably on their website. I doubt you're going to get a paper application at this point, but they're going to collect a bunch of information through that intake application. You're probably then going to have some sort of a conversation with a loan officer, and that's where you'll get to talk all about your food truck, your plans for the food truck, your personal situation, your personal finances. The lender should be prepared to ask you questions. You should also have the chance to ask them questions, so be thoughtful about what you would like to ask them. If the lender doesn't give you the option to talk with a loan officer, that would be a red flag to me. That might mean they're not taking the size of the loan as serious. They may not be as interested in the type of industry. So that would be a number of red flags to me that you're going to want to talk to. In a very digital age at this point, you should still have a conversation with a loan officer, whether that's a phone call or a video call. You're then going to submit documentation. That might happen in the actual intake application. You might have the chance to upload some documents. And again, we'll get into the documents specifically, but like the lender I was at, we would just request them and they would be emailed to us, often through a secured portal and that kind of stuff. After they have everything they need and the loan officer has asked you some questions, they're going to do underwriting. So it's probably going to have an underwriter on their team, or they might outsource it to an underwriter. And basically what the underwriter is going to do is they're just going to go through, all the documentation you've provided with a fine-tooth comb or under a microscope. And so they're really going to poke and prod, and they're trying to they're just trying to mitigate risk, essentially, is they want to protect. Their job is to protect the lender by not making a bunch of bad loans. So they want to make loans that are going to succeed. And so that's what the underwriter is going to do. That underwriting process will probably kick up some questions for you. So they might come back and says, hey, underwriting wants to know X, Y, and Z, or this number was confusing to them or concerning to them. There might be several rounds of back and forth in that process. If you're at any point you're ever confused or whatever, I would encourage you to talk to your loan officer about that. Then at some point, there's gonna be some sort of committee review and a decision being made. If it's a loan, if it's a microlender or a smaller lender, that might be the climax of that experience, the process. Once a committee decides and approves, then they probably can close the loan. If it's a larger loan or a 7A loan or whatever, there's going to be some additional layers of approval and some documentation that has to be collected. So, if it's one of those under 50,000, they're probably not going to need additional information besides closing documents. But if it's greater than that, and if it's the 250,000, 350,000, a million, 3 million, whatnot, there's going to be some additional SBA documentation to be signed and collected that wouldn't have been necessary earlier in the process. But now that you're actually closing the loan, there's going to be quite a bit more. Depending upon, without getting too into the weeds here, many lenders that provide 7A SBA loans, so those bigger ones, can have what's called delegated authority. And that basically means the SBA has given them the authority to make the decision on the loan and just make it. They don't have to ask for the SBA's input. Some lenders may not have that authority, or maybe they do have that authority, but they choose not to exercise it. because they want the SBA's input on a loan decision. In the event that that happens, things will get packaged up, sent off to the SBA. They'll take their time to review it and also offer up their decision or have questions and whatnot. If that's a part of the process, that will extend things. It just takes longer to do it that way. And then ultimately you'll have a closing. So it's probably worth mentioning just the length of the process. Microlenders are going to move the fastest, probably not surprising. They have more freedom. The dollar amounts are lower. And so there's just like a little less risk involved. And so I would assume most microlenders can be as fast as a couple weeks, but they also might take a month or two, depending upon timing in the month and how prepared you are and all of those different variables. The larger loans, again, could take 4 weeks. They could take 12 weeks. It might take even longer than that, So it depends, again, on the time of the year, the time of the month, different variables that can do that. But feel like you can ask your loan officer to give you expectations for that. Okay, so that is the typical SBA loan process. Now we're going to jump into documentation. Okay, so we're going to split these up into 3 sections. We're going to talk about startups first, existing businesses second, and then acquisitions third, and we will timestamp it that way. So if you want to jump to any one of those sections, feel free to do that now. But let's go ahead and get started on documents for startups. So the whole purpose of talking about this, again, coming from the experience of a former lender, is you want to be as prepared as you possibly can before you talk to your lender. It makes a really good first impression, and it just gives you some leverage in the process to expect things to move quickly. You're not giving your lender a chance to detach while you go and collect things. And so I encourage you to do as much as you can ahead of time. So first up is, again, going to be the lender intake application. Every lender's probably going to have their own, so there's not like a default one there you can fill out and then just send that to every lender. Again, it's probably going to be on their website, or if you reach out to like a bank or someone and you talk to them, they might send you a specific link to one. And so that will ask a varying range of information depending upon how they handle their process. They might ask a little bit of information to get you started and then talk to you and then ask you to fill out more, or they might ask for everything under the sun all at once. That will just kind of differ. But some of the documentation you're going to need: a personal financial statement. This is one the lender might have their own version of it, so you might have to fill it out no matter who you talk to more than one time. But I think it's a good exercise to fill it out on your own beforehand, just so I think a lot of people think they have a good understanding of their personal financial situation until they actually have to write it all down, and then they might start to realize, it's a good exercise to be mindful of that. So what's linked here is the SBA's kind of general version of that. Again, lenders might have their own, but I would encourage you to fill it out, have that prepared. Again, this will change too, by month, by quarter, by year. That will evolve. Personal tax returns for a startup. So probably 2 to 3 years of, they'll need tax returns for any owner greater than 20% of the business. I'm fairly certain. But yeah, 2 to 3 years personal tax returns. The big ones for startups are going to be the business plan and the financial projections. So let me go ahead and just show you a quick example of that. This link will take you to, we have like over 60 now free business plan templates for various industries. We do have one for food trucks. So let me pull that up for you now. So this is a free guide. You can get your own copy of this. The benefit of this is the structure is all there. You can just write your information into it, but it's kind of filled out with a fictitious example to help you guide through that. So you can get your own version of this. We've got a video on how to create the projections. We even have a video on how to write the business plan. I think it'll give you like 5 key points to like make it more likely to be approved by a lender, is the video for the business plan. So I think that is worth it. You can grab your own version of that. But yeah, that's going to cover lots of things. That's going to cover how much funding you need, what you're going to use the funding for, just everything about your business plan. So these business plan and financial projections are probably the 2 things that are most important for the startup application, and probably the 2 things that are the most like difficult or like things that overwhelm a startup founder. And so hopefully our resources can help you overcome that. We do have the service where we can write your business plan for you. We'll certainly not push that on you if that would not be inside the budget. I'm not going to necessarily recommend that. I would encourage you to get the free template first and give that a shot. So moving on, and then financial projections. We are ProjectionHub. That is our specialty, is to help people create financial projections. That's probably the most important thing in the startup application process. And it's such an important exercise for you to feel like you really understand your numbers and if your business is going to work financially. And so this resource, this will link to a library of financial projection templates. So we have over 100 different industries. Food truck is in there. So that's got one right there. I'll even just show you what it looks like real quick. It's an Excel template. It might look overwhelming, but I promise it's very easy to fill out. You're only filling out these blue tabs. These little blue boxes is the only place you make edits. So you're gonna have some advertising costs. You're gonna put your menu in here. You're gonna put, just some simple labor calculations. Again, you're only putting things in those blue boxes. Your monthly operating expenses go in here. And then if you have any salaried employees, they'll go here. And then it's gonna generate all of your financial statements for you. All the things your lender needs to see on the financial side for the startup. Okay, so that's a quick plug for that. You can also hire our team to create your projections for you. I think that both of those services are linked down here, but again, not going to push those on you. There's cheaper ways to do that. We have a video guide that will help you do that as well. And then you'll always need to have a credit release form filled out. You're not going to be able to fill that out ahead of time. Every lender is going to have their own credit release form. Every lender is going to do a credit pull. Now, different lenders are going to do the credit pull at a different time, but it is going to be a hard credit pull. So, some lenders might do that right off the bat automatically. The lender I worked with, we waited till later in the process until we had a sense of does this actually seem like a loan we might want to move forward with into underwriting? And then we would do a credit pull. So, you can ask them when the credit pull might occur, but that is the thing. You'll need to be prepared to submit that if they give you the link. Government issued ID, a resume. Resume, especially for existing businesses and larger loans. But, not all startups will need a resume. You might just need to write about your personal experience in your business plan. And then, as mentioned, additional SBA forms after lender approval. Now let's shift to existing businesses. It's a little bit different list. Again, lender application for each lender. Personal financial statement, we've already talked about that. So again, I guess if you jump to this section of the video, I'll explain one time again. Personal financial statement, this link will go to just the SBA's general version that you can fill out, but each lender might have their own that they'd like you to fill out. Either way, I would encourage you to fill out your own as an exercise beforehand. Personal tax returns, 2 to 3 years. That will be for any owner over 20% of the business. Business tax returns, 2 to 3 years. So depending upon your legal entity, you might have your own full tax return. If you're an LLC, you're like a sole prop or something, you might just have a Schedule C. You could submit that as well, but you'll need to have a couple years of business tax returns. A profit and loss statement for year to date, like the current year. A balance sheet for year to date. This link right here will go to a video of a free balance sheet template that we've created that you can fill out. I actually really like the way that template works. It's not just a balance sheet and it just plug your numbers in and you may not know what things go where and how to calculate things. So instead it's set up in a way where it asks you questions and you will answer those and then it will create the balance sheet for you. So it's a really handy tool. Financial projections, very important. So like for startups, we talked about the fact that we have a library of financial projection templates built by our very own CPA for over 100 different industries. But we have this one really powerful template for any existing business. And so it will allow you to, and I actually have it open, I think. It will allow you to input your historical revenue and expense data up to 5 years, okay? So you have your revenue, and then this one it looks really overwhelming. I promise we have a video guide that makes it very easy to do, but you'll be able to put your expenses in, and then it will generate all of your financial statements for you or projections. It will generate the projected financial statements for you. It also does an estimated business valuation, which is kind of a handy tool. So that is, I think, linked to the video for how to fill that out. We should talk about financial projections for an existing business aren't always necessarily required. If it is for like something refinancing, or maybe you're just getting some working capital or something like that, the lender is probably just going to make a decision based off of your financial statements, tax return data, your loan repayment data, whatever the access they have, information they have access to. But if you're expanding, so maybe you're adding a second location, you're adding a product line. Sorry, I should reframe this specifically for a food truck. That would make more sense. Maybe you're adding a second truck, to your fleet of the food truck. That would be an expansion. And so the lender is going to want to see financial projections to see, how is that going to perform? How does it need to perform in order to pay the loan? So that will probably be required. If you have any business debts, they'll want to see a schedule of that, a credit release form. The lender will provide that link. Government issued ID, like passport or driver's license will include there. If you're not a U.S. citizen, there is still documentation for an ID you can submit there. Articles of organization, which you should be able to have or easily get access to. If there's any like business permits, so like health and food safety license, you'll probably need to provide that. And then again, additional SBA forms after lender approval. So depending upon the type of lender you're working with and how much the loan's going to be, if they need additional SBA information, they will collect that. All right, that's for an existing business. Again, if you're interested in having our team create your projections or write your business plan, well, I guess you don't need a business plan, sorry. Create your financial projections for you. That is linked down here. Need help in creating projections, but you should check out the template. Makes that really easy to do. And then lastly, documents for an acquisition. It's kind of like a blend between startups and existing businesses. It has both of those. And so let's just hit that real quick. Again, you're gonna have the application. Each lender is gonna have their own, probably on their website. The lender, loan officer can send you a link directly. Personal financial statement. I would encourage you to fill this out ahead of time on your own because it's just a good exercise to have all of that information down. But the lender will probably have their own that they want you to fill out. Each lender you talk to. Personal tax returns, 2 to 3 years. A business plan for the acquisition. So this is something we do. We offer a business plan service where we'll write the business plan for you. And the most common business type we do that for are acquisitions. And so you can check out that link here. Financial projections are going to be a big one. We have a acquisition financial projection template. So you'll plug in the financial data you get about the acquisition, and it will create projections from that. And you have the ability to tweak that. That's a really powerful tool. I can encourage you to check that out. But we also can create your financial projections for you. And so you can check that out as well, but you'll need to have financial projections. You will need business tax returns from the seller, and then their most up-to-date financial statements, profit and loss, income statement, balance sheet. Your lender might want a cash flow statement. They may not need it. Credit release form, the lender's going to have that. Government issued ID. A resume for not only the owner, but typically they're probably going to want a resume for any key employee you're going to have. So keep that in mind, or any additional owner, they're going to want that. A copy of the purchase agreement, and potentially additional SBA forms, lender approval. And if you are needing some help doing like due diligence, so maybe analyze if you think a deal is a good one or not, or maybe you need some help doing that, you can check this video out. Our founder, Adam, who's in his process of trying to acquire his own additional business, talks through like how to do due diligence. Maybe you've heard of like quality of earnings reports before. So we help businesses by doing like a light version of quality of earnings. So you can check that out here as well. Okay, that's a long section talking about the different documents. So, I guess we'll hit this real quick. The additional documents and expectations. So this additional list here is just going to vary based upon your specific loan request, whether you're, a startup or existing business or whatever, the industry you're trying to participate in. So in our case, like a food truck, you may not have a lease agreement. If you're leasing the truck, then, that's probably something you'll need to provide, especially for a startup. some of these documents you may not provide until after the loan has closed, but it will be kind of like conditional that you have to do that in order to stay in good standing with the loan. So lease agreement, vehicle title, like if you use the loan proceeds to buy the truck, that title will need to be provided to the lender. Most generally, you won't touch the money in that case. You'll go out and find your truck, and then the lender will pay the dealership or whatever directly for that, and the title will go back to them. So that will have to happen if you're doing an acquisition of an existing food truck, a purchase agreement to buy that business, contracts if there are any. So you get the gist. These will differ based upon your specific structure of the loan. And then some additional supporting one if like there's an ongoing lawsuit that you have personally, or if it's like an existing food truck business, if you have that going on, prior bankruptcy, a criminal conviction or something like that, provide that documentation that is necessary to the lender. And then let's talk real quickly about SBA application expectations. So every owner of 20% or higher is going to have to personally guarantee on the loan. So your name is going to be attached to that. If the business doesn't pay back the loan, you will be required to pay it back as a personal guarantor. Collateral will be expected. So the SBA's whole thing is it's to help lenders get comfortable with the collateral shortfall if there is one. So if that loan defaults, the bank can get some money from the SBA to try and help make them whole. It's not 100%, but that's how they're encouraging lenders to make money to make loans through the SBA program, is because the federal government is helping cover some of the losses. Not all of them, so the lender still is going to try to make good loans. But so they're going to expect collateral. The SBA is going to require them to collect as much collateral as possible. And so, if the food truck you're trying to purchase or the business you're trying to start doesn't have a ton of equipment in it, and there's a collateral shortfall for how much money you want, maybe you're trying to get a bunch of working capital or something like that, they are going to ask for all the collateral they can get, including personal collateral. So that could be, a second mortgage on a house, a free and clear vehicle you might own, co-signers, there's just a few different things they might ask. You'll have to invest 10 to 20% of the loan request in cash. So, if you need $100,000 to get the business started, you're gonna have to put in $10,000 to $20,000 of that. And your deal needs to show sufficient cash flow, especially banks or 7A loans. They're going to calculate debt service coverage ratio. So they want to see a number of 1.25 or higher typically. And that's just a calculation to make sure that the business is going to cash flow enough to be able to afford the loan payment, is really what that. And then, here's that list of businesses that are ineligible for SBA loans, but food trucks should be good on that front. Okay, so now that we've gone through process and documentation, let's go back up to finding an SBA lender. So, this is going to be an important step in the process. So maybe you've already identified a lender or an SBA lender that you want to work with, and that's great. I think it's a great idea to talk to like your own bank. Maybe you've banked somewhere for a long time, your hometown bank, and you can explore the conversation with you. Just to caution you and to advocate for the bank sometimes. Have good expectations. Just because they're your longtime lender, maybe you've done your mortgage there, maybe you've had a car, that doesn't mean that you're guaranteed to get a loan, especially for a startup venture. So don't be offended and threaten to move your account somewhere else just because maybe they won't give you that loan. That's kind of how it is. And maybe a lot of times lenders, especially banks, they have specialties and they have a portfolio weight they have to manage, and so maybe they just don't have a great appetite for food truck businesses. But I still encourage you, if you have a relationship there, talk to your lender, just give them a little bit of grace in that process. But let's talk about, maybe you don't know where to start, or maybe you already talked to your hometown lender and they're not interested and you don't want to just apply to every bank down the street. I totally understand that, especially as a startup food truck. Banks may not have a ton of appetite for it. Maybe they want to make a loan for the truck, but maybe they don't want to do anything else, or you have some options there. So let's talk about where to find microlenders, where to find 7A lenders, and we're probably not going to talk about 504 lenders for a food truck. So as I mentioned earlier, we have CDFIs and we have SBA microlenders. Some lenders are both SBA microlenders and CDFIs, but they can also be mutually exclusive. So the lender that I came from was called Bankable in Indiana. It was a microlender that just served the state of Indiana. It was both a CDFI and an SBA lender, and they had a 7A loan product. So there's a lot of overlap between these two. But first, let's check out this link at the CDFI list. Again, this stands for Community Development Financial Institution. This is just a different certification. I think it might be a federal certification done by the Treasury, but I like this tool. So you can come down here, Opportunity Finance Network does this. It's basically just a network of these CDFIs. So they'll have a conference, they all come together each year. So CDFIs can be lenders, but they can also do other community initiatives. And so that's why let's do this. Search by loan fund. So even small banks can be CDFIs. Let's do loan fund, and I'm going to say Indiana, and I want to do micro enterprise. And I'm going to filter that. And one thing I'll point out real quick is that you'll notice like this one, Axion Opportunity Fund from California. There's a few CDFIs that are really big, and so they lend in multiple states. Nothing against those organizations. They are great organizations, and they might be worth talking to. But I would encourage you, if you want to go the microlender or the CDFI route, is talk to the ones that are based in your state or your community first, just because they're probably going to be more, local, I guess, in a sense that you would talk to. And so like here's Bankable in Anderson, Indiana. That's where my lending tenure was. And so this will give you like a nice summary of who they are, what they do, and then a link to their website, and you can contact them too. So this is a good tool to use if you're interested. One thing that I will tell you about SBA microlenders and CDFIs is that you just got to do a little bit more research. As I have said multiple times, they have specific lending specialties, and there's more freedom for them to do what they want and what they want to lend to, more types of initiatives they want to follow, and all of that stuff. So you just have to do a little bit more research to make sure, it could be a good fit for you if you don't fit in their box. So that's just one encouragement. Whereas a bank's going to be more standardized, harder to get money, probably, but they're more general in what they can lend to, and these types of organizations, you just got to do it. So by research, all I mean is just go to their website, talk to, read on their website, and maybe talk to them to ask some questions. That's all I really mean by that. Okay, let's go back to our checklist and do this SBA microlender list. So these are the ones that are official SBA microlenders. And so again, if I continue our example and I go to Indiana, or you can go to whatever your state is, and you can look through these different options. So here's Flagship, DBA, Bankable. That's the lender I talked about. And it gives you contact information and a link to their website. So that is, I want to go back to our checklist. There we go. So that's microlenders. Again, that's going to be those smaller dollar loans, generally under $50,000. But like Bankable, the one I talked about, they also had a 7A loan called Community Advantage Loan that could go up to $350,000, I think. But yeah, that's where you can start out looking for those. Okay, 7A, most common. Again, I mentioned this is going to be a lot of banks. Doesn't have to be a bank, but that's going to be the vast majority of them. And there's kind of two different approaches here. You'll see in parentheses, if you want to find the lenders, and if you want the lenders to find you. And having the lenders find you probably sounds great because maybe it sounds like less work, but I actually think it's more work, and I'll show you why. So it's this SBA lender match tool. We'll open it up and take a look. So you can basically fill this out and submit your information, and it gets blasted out to a bunch of SBA lenders. And then they can opt in to receive your information and talk to you, which sounds awesome. But a lot of lenders will just say yes by default because they want as many leads as possible, even though they may not be the best fit or have the best intentions in doing your loan. Certainly great lenders participate in that, and I'm sure it's been successful for many people. All I'm telling you is it might just be more work for you. You think it's less work, but you might end up having to filter through these different lenders and talk to a bunch of different ones. They might all end up to nothing. Whereas if you're willing to put in the time and do some research, there's a more nuanced approach in just seeking out the lenders that might be a better fit for you. So if we go to, if you want to find the lenders, this is actually a tool that we created. So I'll put a link down in the description below if you want to be able to access this. And essentially what this is, let's click on this so we can go full screen. what we've done is taken like the last 5 years of SBA, 7A SBA loan data, and we've added some filters to it. So basically we can filter by state, type of business, how old the business is. Let's do those three primarily to see who is making the most loans to that specific type of industry in that specific state. So let's try to do food truck here. So let's continue our example. Let's do Indiana. I'm gonna click only. So we can see little one, that's the only filter selected there. And then let's do food truck. And so right off the bat, let's see who we got here. So you can see that food trucks, as far as banks go, these don't have to be banks, but mostly they are not overwhelmingly popular loans to make in Indiana. Not super surprising. There's not a lot of dense urban areas in Indiana. But based off of this little bit of information, Huntington Bank seems to be the best bet. And I can speak from personal experience to say, like, Huntington Bank is a great SBA lender in the state of Indiana. And so that would be a great place to start. And so this is just a quick tool to help do that. You know, if we want to switch up this example, maybe let's say New York. So now we can see if you were in New York, who's making more. So we can go ahead and try this. Let's say maybe they're new businesses. So now that refines it, right? So like if we take that off, TD Bank is number one, manufacturers, and Key Bank. And then if we go back to startup, or let's do new business, so less than 2 years old, or we can try startups. We'll see if anyone's making startups. You can see some of those banks that were listed before, there's a lot more doing that, or a lot more spreading that out. But let's just do the new one. Key Bank is the top one. So that's just a quick tool that you can use that can help you filter through some of those 7A lenders in your specific. And that might, then you would obviously want to look up like Huntington Bank near me, or wherever state you're in, and call them and initiate that process. Okay, so now that we've talked about finding an SBA lender, the last thing I think there is to talk about is just some recommendations to improve your approval chances. And so this is just going to be from my personal professional experience and just what I have seen and what we have seen to give you some additional guidance as you go through the SBA loan application process. And the first point is be prepared. So we hit on that a little bit in the document section, but just have as much documentation ready as you possibly can before you talk to them. There's going to be documents that you can't prepare ahead of time. There's, each lender's going to have their own forms they want to fill out, and there's some documents you're not going to have until after the loan closes, and all that's fine and dandy. But, looking at our checklist again, like using startup for an example, like have your business plan and your projections, have those done before you ever talk to the lender. Have your personal tax returns. So go ahead, if you use a tax accountant, talk to them ahead of time, get copies of your taxes. Just have as much as you can ready to go. Existing business, have all your taxes, your business taxes, work with your accountant or use a template to get your financial statements updated and ready to go. Like, just have all of that stuff ready, because when you talk to the lender, that's going to be the best impression. Like, I already have all these things ready for you to go. Like, that's going to expedite things because they're going to know you're serious about it. I think a lot of loan officers in their first conversation just assume, it's exploratory, and they just, it gives them a chance to kick the can down the road. But, you can demonstrate that you're serious and you're ready to move quickly. And so that is one of my recommendations, is doing that. Second is to have the right expectations. So, we talked a little bit about these down here, and a lot of these are the expectations that I would mention again, but especially like the personal guaranteeing, like being prepared for that, understanding the fact that they're going to want collateral. And so you just need to decide, what are you comfortable pledging and what are you not comfortable pledging. Is good to do that soul searching before you get into the process. Even things like maybe you won't need a co-signer, but just think, if I had to have a co-signer in order to get this loan, A, would I be willing to do it? And B, if I was, who would I even ask to be my co-signer? And have that conversation before you even talk to the lender. If that's a sibling, if that's a parent, if that's a friend, and have that conversation and be like, I'm going to start a food truck. I don't think I'm going to need a cosigner, but in the event that I did, is that something you would consider doing? And just because when that time comes and the lender's like, I think we're going to need a cosigner in order to get comfortable with this. And if you like, great, I already talked to so-and-so and they said that they'd be willing to do it. Let me go and double check with them to make sure they would be comfortable with confirming that. And you can just move so much quicker through that process. But let's say, what would be another good expectation? Probably the length of time. So we already talked about how long the processes might take. Expect a few weeks at the shortest, and maybe even a couple of months is semi-average. So have that conversation with your loan officer early. Just like try to ask them what expectations for the process might be, but it's largely going to be dependent on you. Like, you can't have expectations for them if you haven't got all your things together, or if it's taking you forever to get them together. Okay, so if they say, okay, we need all of these lists of documents, and you say great, and then it takes you a month to get the documents together, you can't come back and be like, okay, so when will the process be done? Because like they've been on pause all that time. So have the right expectations. If you are prepared and you've given them everything quickly and you are on top of your stuff, then you have the ability to like put a little bit more pressure on them, apply a little bit more pressure, and ask for things to move quickly, ask for updates regularly. But you don't earn that ability to do that unless you're actually on top of things. Third, find the right lender for you. So we just talked about how to find an SBA lender, but find the right lender for you, not necessarily your hometown bank. It's certainly worth having a conversation with them. Or 2, not necessarily where your broker wants to get you. So if you decide to work with a loan broker, not all loan brokers are this way, and loan brokers can be great, especially if you're really struggling to find a lender. Maybe it's worth it, just trying to work with a loan broker. But keep in mind, loan brokers are kind of like, they work for a finder's fee. So they are going to try and get you to go to the lenders where they know they're going to get the best cut of the action. So that may not always mean that the lender they want you to go to is the best structure, terms, rate that you would like. And so just read that fine print, maybe even ask the broker, like, what's in it for them? Like, what is their typical fee structure? Like, what kind of finder's fee will they get from that lender versus another one? So that's why I would encourage you to do the homework and use some of these resources to contact your own lenders, and just be mindful of that. Fourth point, I don't know if it's worth necessarily numbering all these, but just be forthcoming and share the dirty details, share the dirty laundry, because it's going to come out eventually. And so it might save a little bit of embarrassment, but also just a lot of time. Things like criminal history, reasons for a poor credit score, confusing financial line items. Like, just don't try to hide anything just because you're proud or it makes you uncomfortable. Like that, those things need to come out sooner or later. And if they don't come out until after closing, that's a big no-no and could really get you in some trouble and in a bad position. That could look like a lender calling a loan and all of that kind of stuff. So just be forthcoming about all of that information. Have accurate financials and realistic projections. So using one of our projection templates as an example, our food truck one, and a simple way to do that would be, say you use this template to create your projections. You could go, and it gives you all of these like KPIs and these key numbers. You can go out and benchmark those. Like, you can Google like, what's a typical net profit margin for a food truck, and it's going to tell you, 5 to 20%, and then double check that with your numbers after you complete your projections. So doing little exercises like that can really help you make sure that your numbers are so accurate. If you hire a service like ours or an accountant, or you use a template like this, like that should cover kind of the reliable side of things. But when it comes to like being realistic or benchmarking those, or what's typical for the industry, doing this kind of research and weighting that against the industry is a smart thing to do. Now, like, this template is pre-filled out with some numbers we think are typical or what we've seen to be typical in the industry. So that's a good starting point. But that's just a good exercise to do, because it's a big red flag for a lender if their first impression in the numbers is like concerning or questionable. And then if you're like, okay, well, wait, let me go change those, and then you come back a day later and the numbers are all different, That's especially scary for like an existing food truck, for the financial statements, but for projections too. So it's hard to come back from questionable numbers like that. So really make sure those are dialed in before you apply. Ditch the long and generic business plan. Keep it short and sweet and useful information. Long business plan doesn't necessarily mean good business plan. So aim for the 15 to 25 page business plan, have it jam-packed full of information. A third to a half of that is probably should be your financial projections. And so just keep it short and sweet. Check out our food truck business plan 5 key points video. It might pop up here, but it should be linked down below. That should be really helpful in that process as well. Strengthen your application. So we already talked about a co-signer is a good way to strengthen your application if you can be proactive. Maybe you want to wait to see if your lender wants that first, but that's a really good way to strengthen your application. Knowing what personal collateral you're willing to pledge, and outside income is a big one. So that's going to be aligned. If you're keeping your full-time day job and then starting this food truck on the evenings or the weekends, but you're going to keep your job for a while to help soften that blow, that's a really great way to strengthen your application. A lot of people think that the bank's going to want them to quit their job so that they're fully focused on the business. They expect you to be fully focused and make as much money as possible. So if you need to keep a job for a little bit of time, you should be willing to do that and consider doing that. And lastly, as we talked about in the business plan section, make sure you as the owner or your team has ample and relevant experience. So know what you're getting yourself into, know what you're doing when it comes to, starting a food truck business. If hopefully you have some food truck experience or restaurant experience. If you don't, talk about what transferable strengths and skills you have, but then you need to supplement your experience with a partner or a key employee that does have experience and knows what they're doing in the food truck industry, because that's another potential red flag for your lenders. If they don't think you know what you're doing or getting yourself into, it doesn't matter if the numbers look good. That kind of comes down to execution, and you need to convince them that you're going to have the ability to execute. So there we have it. That's kind of the one-stop shop, how to get an SBA loan for a food truck business. I'm not sure. Let's do one quick scan here. I think that covers everything. Please like the video, subscribe to the channel if this was helpful to you at all. Leave a comment or contact us at support@projectionhub.com if you've got any questions about preparing for your SBA loan application, especially if that's projection or business plan or due diligence related. We can help with all of those things. And we've tried to link a bunch of things in the description down below, but also grab this free checklist because all these things are linked in here. So we wish you the best of luck with your food truck, and we'll see you in the next video. Thanks.